right, in this video, I will show you, first of all, what an order block is, how I use it, and why it, in my opinion, is one of the most important points of interest you can throw on your chart. I use it a lot in my trading. I have another video where I actually show you a strategy of me using order blocks, but this video is just going to be me explaining order blocks, okay? So I know that there are a ton of different definitions out there. I think maybe the word order block comes from ICT. I'm sure he thinks that he invented this concept. I'm sure he did it. But I call it either an order block or a demand block or a demand zone, right? Because my definition of an order block is a period of consolidation or a counter trend move within a trend that breaks structure, okay? I will show you what that looks like. First of all, before I show you exactly what it looks like, when I say either a period of consolidation or a counter trend move within a trend, that's because, to me, if price looks like this and then does that, or if it just does it really fast, that's the same. If you really want to get nitpicky with it, we could probably call this I would probably just in daily talk call this demand, and I would call this like an order block if we have to be extremely specific. But just to be clear, to me, it's the same thing. I use it the same way, use them the same way, because I mean, this period of consolidation, if you zoom out to a bigger time frame, is going to look like this, right? So it's the same thing. A period of consolidation or a counter trend move within a trend that breaks structure. What do I mean when I say a counter trend move within a trend? That means if we're going up, all right, the trend is up. So the counter trend move is these periods where price goes down, okay? So that's how I define an order block, okay? Now let's actually spot them on the chart. So again, a period of consolidation or a counter trend move within a trend that breaks structure. So we have a clear uptrend here, right? So let's find, these are really small, but I'm gonna mark them anyways. Like I'll mark both of them, right? And mark a few more. We've got a counter trend move right there. So let's zoom in here and I'll explain why I'm picking these. Okay, so clearly we're going up, right? Here we've got two candles that are down close candles within that uptrend, right? So that fits the definition. That's why I choose them. A lot of other traders, you're going to see that they choose one specific candle and make a big deal out of it. I don't think that's important. That's why this is the way that works for me, okay? So the idea is here that when price comes back, this is going to be support, right? We can do the same thing here. What do we have here? We have a up move, right? That breaks structure. This is the last, well, this is the counter trend move. This is the only down close candle before this high takes out this high, right? This now becomes a point of interest where price might bounce from, right? Let's do it one more time. What happens here? We have a high, right? That is being taken out by this high, right? This breaks the structure. So what is this? This now becomes our consolidation, right? Our order block, our series of down close candles that led to this high, and this should be defended. Now, in this particular instance, this is like morning price action, so there's a bit low volume. We kind of deviate below it, but still we hold it pretty well, okay? Again, down close candle in an uptrend. Here we don't come down to it, right? So there's no trade. Again here, period of consolidation of down close candles. What does price do? It bounces on it. We break structure again. Now this becomes your order block. We bounce on it, right? What happens here? So I wouldn't do anything with these because none of these price legs that come after break any structure, right? This is where structure is being broken. These highs are being taken out by this move, and that's why I would mark these candles as my order block, order blocks, demand blocks, whatever, right? So that's why I would do it. Now, let me try to explain something that's incredibly important, I think, because memorizing all of the different concepts can be extremely difficult if you're new to trading, right? What's an order block, a break of structure, everything, right? There's so many different words. And if you only try to memorize it by what the technical definition is or what it looks like I just showed you, I think it's extremely difficult to remember everything. So this is something that has helped me tremendously. If you think about what actually happens instead of just what it is. It makes it so much simpler. Okay, so let me try to explain. If you think about what actually moves price, right? It's just the relationship between buyers and sellers, always. If price goes up, that means that there are more buyers present than there are sellers present, right? Demand exceeds supply, all right? And the other way around is true as well. If price is going down, that means more, the sellers are stronger than the buyers, right? More supply is being put onto the market than there is demand for, and then price goes down, okay? And an order block tells that story, right? The order block actually tells that story that I just gave you, right? When price is going up, then buyers are dominating. And when an order block is then formed, right? Here buyers are just dominating, right? Buy. The buy pressure is insane, right? We get to here now, okay? So what story is being told here? When an order block is formed, like this period of consolidation or counter trend move, that's the first time in the trend that buyers are met with an overwhelming sell pressure, right? At least temporarily. So the order block, in my opinion, the way I see the market, is a literal battle being fought between buyers and sellers, right? Buyers are super strong, and then oof, now they encounter sellers. They have to fight, right? And when price eventually breaks out of that fight and breaks the structure, that is the buyers or the bulls winning that battle, right? So when price comes back down to it, we can expect them to want to defend their positions, right? They fought that battle, they won. This is a place on the chart where buyers are stronger, and now we expect them to defend it when it comes back, okay? So that's how I think about it. It's like, okay, an order block or a period of consolidation in a trend is a battle that was fought, and one side won, and therefore that side is stronger, and they're going to want to defend their positions when price comes back. You could say that demand exceeded supply. Sellers came onto the market, they put supply onto the market, they wanted to sell stuff, but the demand was there to not even match it, but kind of outpace it, right? So we know that in this area, we had demand. There was demand for this asset at this price. So there might be demand for this asset still when price comes back to it. That's something that really helped me kind of understand why they're important and why you should pay attention to them. Now, this is just the most recent price action on the Nasdaq on the low time frame chart. Let me give you on the 1 minute chart. Let me give you a few more examples, and then we'll jump to a higher time frame. So up here, like I wouldn't do anything with this, right? Because nothing here is really breaking structure. So these are not really important. I mean, I would view this as a range, and then I wouldn't use it, right? But see where price starts to round off again. It's in this area of prior demand where the bulls and the buyers were strong, all right? And then again, we can start to talk about when we break structure, right? Here we were consolidating, trading sideways. Here we actually start to break the structure. So now this whole area becomes what? Becomes demand, right? And the next time price trades down into it, we start to push up. And again, the pushes are getting weaker and weaker, and we're starting to form sideways. So those are warning signs definitely that you can look for. But let's try to pick another asset, another time frame, just for fun. This is Bitcoin on the daily time frame, and again, we have sideways here, so we don't really want to use this concept, right? But this is the last battle that was fought in this range before bulls won, before the buyers won, right? So we can mark that out. And then on a high time frame, a long time afterwards. So this is the 8th of July, and this is August, September. When we come back, we can expect the bulls to defend their position, and we go up, right? Now, we don't have any order blocks right now that I can use as examples, but what I can say is I would suspect that if Bitcoin comes down here again, that will be support, right? Because we have the last counter trend move before we broke structure. I think this would be support. And if Bitcoin just continues to go up from here, I think this area is going to become our demand block. So that's how I see order blocks and demand blocks. I know it's a little bit different from what you might hear anywhere else, but this is just literally what I've been doing for years and what works for me and the way that I view and read the market. So I have another video where I explain explain how I would actually take entries from these order blocks, because especially in a high time frame, you don't just want to bid them blindly. You actually want to use a low time frame entry model to get in and out of trades when you trade them. So if you haven't seen that already, you can go find that video on my channel. But this is order blocks, a battle being fought between buyers and sellers. And that's the battle you can see on the chart. And when price comes back to that, you can expect the side that won to try to defend their position. Obviously, nothing works 100% of the time, but it's a really good area to look for a reaction. And that's why I want you to use the low time frame entry model from the other video to look for that reaction and not just blindly bid whatever area of demand or order block that you see in your chart. All right, I'll see you in the next one.